Hey everyone, should you borrow money and buy Bitcoin with debt? You may have heard people talking about the fact that, hey, the interest rate I can get if I borrow money is relatively low and the return on Bitcoin is way higher. So why don't I borrow money at whatever interest rate and then make more money on the Bitcoin? That is generally a bad idea, but I wanted to provide the nuance of why it's usually a bad idea and what exceptions there might be. Okay, so we're going to work our way from the worst ideas to the best ideas. So the worst idea is to borrow against anything that is mark to market, M-A-R-K to market, M-A-R-C-K-E-T, market. Okay, anything that you don't ever want to borrow against something that is mark to market because you can get a margin call. A margin call means that your collateral, which means the thing that you are borrowing against, has changed in price down, and now you have to provide more collateral, otherwise they're going to take your collateral. Now, the only time this would happen is if the things that are marked to market would be things like a stock portfolio, if you borrow against a stock portfolio, or if you borrow against your Bitcoin. Don't ever borrow against your Bitcoin to buy more Bitcoin. Don't do that. I promise you're going to blow yourself up if you try to do that. So borrowing against your Bitcoin is mark to market. The term mark to market means the price of your collateral is floating by the minute or by the hour or by the day based on the price of the market. So if you borrow against stocks, the stocks are constantly going up and down. If you borrow against Bitcoin, the Bitcoin's constantly going up and down. And what happens is, let's say you have, I'm going to use big round numbers, you have $100,000 of Bitcoin, and you borrow $50,000 of that, which is a 50% loan to value. It's called an LTV ratio, loan to value ratio. So you borrow $50,000 against your $100,000. Now they're holding your $100,000 of Bitcoin. It's still yours, but they're holding it and they're giving you $50,000 of US dollars, and then you turn around and buy more Bitcoin. Now, if everything works out, then what's going to happen is you'll repay the loan at whatever 10% interest. But then you get 50% more Bitcoin. But the problem is, if the value of your $100,000 of Bitcoin starts to drop, you're going to get a margin call. Because now $50,000 that you borrowed is more than 50% of the value of your Bitcoin. So what happens is the price of your Bitcoin, you borrow $50,000 when the value of your Bitcoin is $100,000. And then the value of your Bitcoin starts to drop, and it drops to 90,000 and then 80,000 and then 70,000. And you get notices from whoever you borrowed from saying, hey, you have to put up more collateral. You borrowed $50,000. Your Bitcoin used to be worth 100. Now it's only worth 70 or 80. You got to put up $30,000 more Bitcoin. Otherwise, you're going to get liquidated. Liquidated means they keep all of the Bitcoin you put up as collateral. Now you still have the $50,000, but you lost the $100,000. So you basically lost half your Bitcoin. And of course your 50,000, because the price of Bitcoin's dropping, is now only worth 35 or 40. So don't do that. Don't borrow against a stock portfolio or a bond portfolio, or just don't borrow against anything where the asset itself is fluctuating in price, and that is your collateral. So that's the worst idea. Okay. The next worst idea is to borrow against your house to buy Bitcoin. Why? Because if it doesn't work out as you planned, your house is at risk. Don't do that. I would never put my family's residence where we live, I would never put that at risk because I borrowed against it to buy more Bitcoin, and then the Bitcoin went down, and then I couldn't make the payments, and then I lost the Bitcoin. And then, technically you wouldn't lose your house unless you stop making payments, but you might lose all the equity in your house that you used to buy Bitcoin. So I would generally not do that. Now, it's way less risky to do that as compared to mark to market, because the value of your house that's appraised by the bank does not change on a day-to-day basis. So it's not like an appraiser comes out to your house every single day and says, ooh, a hailstorm's coming in. Your house is now 20% less valuable because it might get hit. That doesn't happen with your house. So it is way safer to borrow against your, to take out a home equity line of credit, HELOC, a home equity line of credit. It is much safer to do that as compared to borrowing against your Bitcoin or borrowing against a stock portfolio or something like that. But it's still extremely risky, and I would never recommend it, and I would never do it. I am never going to jeopardize my house or the equity in my house to buy more Bitcoin. But again, I'm not everybody. I know people who do it. Again, at least it's way safer than borrowing against Bitcoin to buy Bitcoin or borrowing against stocks or something like that to buy Bitcoin. But I still wouldn't do it. Okay, the next sort of less risky thing you could do is borrow against your 401k, for example. Again, you're putting some of your retirement at risk, but at least you're not jeopardizing where you live. Again, would I do that? No, I would not do that. And I have a very high risk appetite. But I also have enough other money to buy Bitcoin that I have never had to think through, what if I really wanted to buy more Bitcoin and my only asset was a 401k or the equity in my house? If that was my only asset to buy Bitcoin, I've just never had to think through that because I've always had other money I could use to buy Bitcoin. So if you are in the place where the only asset you have of any significant value is the equity or your home or a 401k, my answer is I would never recommend somebody borrow against that to buy Bitcoin. Especially because everybody starts talking about doing it when Bitcoin's setting new all-time record highs. If anyone was going to ever do that, the time to do it would be right after FTX blew up back in 2022 or any time in 2023 or even most of the time in 2024. But the problem is everybody starts getting the bright idea to borrow against their 401k or to borrow against their house when Bitcoin is up in the stratosphere, setting new all-time highs every day. And it's like way up in the thin air of the atmosphere. And then everybody gets the bright idea to borrow to buy more of it. So if somebody was going to do that, I would say, A, it's a bad idea. And if they were like, Joel, I'm not going to listen to you. I'm going to borrow against my 401k, or I'm going to borrow against the equity in my house to buy Bitcoin, and you can't stop me, I'm going to do it, then I would say, A, that's a bad idea. And B, at least do that when Bitcoin is in a serious correction and everybody's talking about the end of the world and Bitcoin's never coming back and it's down 30% or 40% or something like that. At least do it when Bitcoin is massively on sale, because at least then you're not risking, buying the top. Now, I don't think buying Bitcoin at $120,000 is buying the top, but I don't know where the top is of the cycle. I think long term it goes to $1 million a coin, but on its way to $1 million a coin, it could go through multiple 20, 30, 40, 50% price corrections on the way between here and $1 million. And we've had 2.5, all of 2023, all of 2024, and half of 2025 on a serious bull market. I mean, we've been, the lowest point in November of 2022 was 15,500. So Bitcoin has been on a tear, which again, a bunch of price corrections of 20, 30% along the way, but we've been on a pretty epic tear from 15,500 in the fourth quarter of 2022 to the present. So if you're getting the bright idea to borrow against your house or your 401k today, as James Check, my favorite Bitcoin analyst, would say, we are in the fourth quarter of this ball game. Now, after we go through the fourth quarter, then we start the first quarter of the next cycle, which sucks. And I don't know, maybe it drops from here. I don't think so. But maybe it runs up to 180,000 and drops to 120 again, which would be, I don't know, however percent price drop. I don't know. Nobody knows what's going to happen. But if you're going to borrow against your 401k or your house, and I can't stop you, and you're going to ignore my advice to not do that, then the time to do that is not when you're setting new all-time high record highs every day. The time would be to do that when Bitcoin's down in the dumps. You know a lot about it. You have deep conviction, or at least we've been grinding sideways for months on end, which gives you some absolute certainty that we're not at the top of the cycle, because we've just been grinding and grinding and grinding and grinding sideways. Again, right now, we just came off, we're at record high territory in the last 24 hours. So, it's typically an especially bad idea to borrow against a 401k or a home equity when you're setting record highs every other day. That's generally the worst time to do it. One second. Okay, so we've covered never borrow against your Bitcoin to buy more Bitcoin, never borrow against stocks or anything else that changes in value on a daily basis. We've also covered that it's a bad idea to borrow against your house or your 401k to buy Bitcoin. But if you're going to do that, again, the time to do it is when Bitcoin's in a major price correction, not when it's setting record highs every other day. Then next up, is it a good idea to to not pay off a house or a car in order to buy Bitcoin. Now, I am much more open to that. In my case, I needed to buy a new car because one of my kids turned 16 and they needed a car. So they were getting the 2010 Honda Odyssey family van that's 15 years old with 230,000 miles on it, which freed up somebody to get a new vehicle. Well, it turned out I was in the rotation, and so I bought myself a 2026 Tesla Model Y, which is like the most amazing car you can buy, in my opinion. It's not the expensive. The expensive Teslas are the Model X and the Model S. So it's not the expensive Tesla. It's just the best Tesla. And the Tesla Model Y, I bought a 2026 back in March. Well, Bitcoin was trading at $85,000 per coin, 85,000. And I did not want to sell the Bitcoin to buy the Tesla, which I could have done. I had the Bitcoin. I still have the Bitcoin. I could sell the Bitcoin and buy a Tesla right now. But instead of doing that, I went to Trustmark and I took out an auto loan at 6% interest for 5 years. And I paid for the Tesla that way. And now I pay Trustmark back with a monthly car payment. Now, the only reason I did that because one, I can pay that car payment all day long. I could pay off the car today in a heartbeat with, relatively little impact on my net worth if I needed to do that for any reason. I just didn't want to do that because at 85,000 a coin, Bitcoin had been up to 109,000 and it was down at 85. So just like borrowing against home equity line of credit or a 401k, I'm thinking, I don't want to sell Bitcoin down here at 85,000, especially when it's tasted 109. I don't want to sell it down here at 85,000. So I will borrow US dollars to buy the Bitcoin, to buy the Tesla and keep my Bitcoin. And then I will pay off the Tesla slowly, month by month over 5 years at 6% interest. Well, that is working fantastically well because my car payment is coming up. It's the 14th of the month. My car payment is coming up and I'm about to pay a car payment that is like whatever, 30% discounted or whatever it is. I'm paying with $120,000 Bitcoin for a car payment that was established when Bitcoin was 85. So whatever percent less 85,000 is than $120,000, that's a significant discount on my car payment. And hopefully I'll get to the point where I'm paying like half, where, Bitcoin's double $85,000 and my car payments are less than half of what they would have been if I had just paid up front. So I am much more open to financing a house or a car so that you don't have to sell Bitcoin. But that assumes you already have the Bitcoin and you are financing a new purchase of a house or a car or a used house. Obviously, my house is used. Or in my case, a new car, but I could afford it. Otherwise, I would always recommend a used car, not a new car. So I'm way more open to that. That's not saying I recommend it. I'm just saying I'm way more open to that if somebody says, I have my Bitcoin, I could liquidate it and buy a car, or I could liquidate it for a 20 or 30% down payment on a house, but I don't want to. Instead, what I'm going to do is... Crud, I've got to go deal with a natural gas leak. This video, unfortunately, is going to be in 2 parts, which I know is super inconvenient. But here we go. It's just going to be in 2 parts. Sorry, everyone. I'll do the next part in a minute.